Being Sartre brings you financial transformation. Namaskar, I am Chanakya. Welcome to our short presentation. Have you ever wondered how the rich keep getting richer while broke people remain poor and the middle class seems to be shrinking? Well, this isn't mysterious as they may appear when you examine the specific differences in how the broke people, the middle people, and the rich spend their money. Now, this is such a simple concept, yet so profound. It really knocked me out of my chair when I finally understood. I'm going to show you exactly how the rich spend their money, and you can evaluate for yourself why they keep getting richer and the broke getting poorer, and why the middle class remains so stressed out. Now, to get started, I like to review some financial terms that we will be using during this presentation. The terms that you need to be familiar with are cash flow, which means money you bring in; expenses, which means money you spend; assets. Now, this is the most confusing one. Let's make this simpler for us, and this is most important. You are probably familiar with the traditional definition of an asset, which is something you own or have equity of. However, back in the 1990s, my friend Robert Kiyosaki has introduced us to a new definition of an asset. He taught us that an asset is something that pays you, and that's the definition we will be using it here. Liabilities is the last term, and it's defined as thing that costs you money. As an example, a house is typically viewed as an asset, but can it be actually a liability? Yes, with our revised definition, anything that costs you money is a liability, not an asset. If you have a mortgage, your house is an asset to your banker because it pays them interest every month. But a house can also be considered as an asset to you. Yes, in the right circumstances it could, when it pays you money. Let's say you buy a house and you have rented out, and it paid you a positive cash flow every month after all expenses. That would then be considered as an asset because that pays you a positive portion of rent, right? Now, one more time with the terms, just for us to be very clear before we continue. Cash flow, money you make; expenses, that's money you spend; assets, pays you money; liability, costs you money. Now, let's see how broke people spend their money. I am speaking about that large portion of the society that lives from paycheck to paycheck and who never seem to have any money. In fact, there is more months left at the end of the money. And I'm sure many of you can relate to that group. On payday, broke people are going to buy what I call it as a stuff. Well, what stuff? Well, that's inexpensive things that people buy that they don't really need to survive. You're going to someone's house and you don't find any counter or table space in their house because of all the stuff on it. Where do they get all the stuff? They buy it at the free market, at the fashion street, a garage sale, at the craft shop. So, cash flow comes in and it goes straight to the expenses column to buy stuff. You see, broke people never educate themselves on assets and liabilities. They justify buying all this stuff by claiming that it costs a little. But over the years, it's all they ever have: stuff. The problem is, their cash flow never created or produced more cash flow. I see a lot of financial difficulty out there, and I don't think it should be this way. Creating wealth isn't a mystery, it's a formula. The only reason someone doesn't create wealth is because either they doesn't know the formula or they don't apply the formula. Now let's take a look at the middle class. The middle class is the group that the society mistakenly thinks as rich. They are not. Yes, they typically earn a six-figure income, and many of them appear rich. But it's that they buy with their money that keeps them prisoners of the middle class. What they typically buy are liabilities. Remember the definition of liabilities? Things that cost you money. By buying liabilities, the money gets pushed out through their expense column. Liabilities are items like cars, farmhouses, boats, credit card debts. Now let's see just how this happens. The middle class gets a nice paycheck, say 3 lakh rupees per month. Then they split down in the middle and pay the monthly expenses with half. And with the other half, they make a down payment for a new car. The car costs 1.5 lakh rupees now. And after they add all the insurance and the maintenance, that cost will add another 20,000 new cost every month. A few months go by and they want a boat, a vacation home, a Rolex watch on their credit card, a vacation on their credit card. And before you know, their liability has raised their expenses level to near or above their income levels. They actually spend equal to or more than they make. Meaning, they have to go to work and they have to make certain amount of money every single month just to cover their liabilities. The other important issue between both broke and middle class people is that normally all of their cash flow is dependent on their own effort, meaning that they educate themselves to exchange their knowledge and expertise for someone's money. Also, the money they earn is usually the highest tax form of income. Here is an example. An attorney or a lawyer is knowledgeable about law, so people pay him or her in exchange for that knowledge on an hourly basis. The problem here is that if that attorney isn't sharing that knowledge with the client, then the attorney isn't making money. This causes lots of anxiety and stress in their lives. And if you ask them to take an afternoon break for golf with you, well, they rarely can, because money costs them to take that time off. The reality is that it's a roller coaster ride. That's the middle class. Now, I know this group very well because a great deal of my adult life, that was me. Now let's see how the rich people spend their money. Rich people acquire assets. Again, an asset is something that pays you. If you want to become rich, buy assets that earn you more money. The money cycle look like this. Acquire assets that produce cash flow. Invest the profit received from the assets you bought to acquire more assets. That produces more cash flow. Invest those profits to acquire more assets. That produces more cash flow. The rich spend their money and acquire things that produce more money. Here are few examples of assets that produce more money. Investments are the obvious ones: stocks, bonds, and real estate. Education is another asset. If you learn something that produces more money for you and you actually do it, that's buying an asset. There is a great quote that goes, if you think education is expensive, you should see how expensive stupidity is. Another example of asset that you can acquire that can pay you are cash generating opportunities, especially those opportunities that can create a passive cash flow. Passive means once you built it up, the money continues to flow, whether you're still building it or not. Here is a small example. Let's assume that you bought a pinball machine and you put it in a barber shop, and you don't spend any of this profit. You spend the profits in buying another pinball machine and put it in another barber shop. This, by the way, was Warren Buffett's first business. If you don't know who Warren Buffett is, he is the top 2 richest man in America. The rich are extremely eager to find those passive cash generating opportunities because those opportunities continue to pay them month after month, year after year. You know, I see again and again happening with successful entrepreneurs. They find the passive cash flow stream and they build up, and it continues to pay them month after month, year after year. They then take those profits and multiply them in another passive cash flow opportunities, and then again in another. In conclusion, here's what I have learned over the years. You can't find these passive cash flow generating opportunities unless you are open to hearing about them. Then once you find them, you must be willing to find what fits you and then act. These opportunities are out there. Just need to find them. You also must be opportunistic enough that when the right situation does present itself, you don't miss it. So remember, broke people buy stuff. Middle class buy liabilities. Rich people acquire assets, preferably cash generating opportunities that can create passive cash flow. They then take that cash flow and invest in another asset that produces more cash flow. That's the wealth creation formula.